Good afternoon, traders. Welcome to the Moy Analytics Afternoon Energy Podcast for the 17th going into the 18th of August. I'm going to start off with the natural gas. Okay, we saw a lower trade again today. We left a minor bearish reversal above 3 days ago and been seeing pressure since then. I said on the 13th we left a minor bearish reversal. We'd come off 131 ticks from the 277.20 open, then down to 263.80. That's about another 3 ticks below that, and then short covered. Maintain gap higher tomorrow. We'll leave a minor bullish reversal below. Okay, and the crude oil rallied again today. One of the reasons why this is coming out later is I've rolled all the contracts into the October contracts. But in the crude oil, to break back above 67.91, it's brought in $25.59 of strength. Number of other bullish calls here in the medium time frame. Then they warned on the 23rd of pressure. We came off $17.95 from the 92.19 close. A number of other bearish calls in here. Those were all on hold. And the break above 76.87 brought in $8.17. So the strength warned about above. Break of above 79.56 brought in $5.48 of the strength warned about above. And then the maintain gap higher on the 10th left a minor / medium bullish reversal below. We rallied $5.31 from the 79.73 open. So those all roll into the OC, and I'll be updating those with the SEP until the SEP comes off the board or expires. And then the trade above this formation right here in the October also warned a strength. That came in at 81.57, and we've seen strength up to 84.51 a level. It's possible exhaustion right here between 84.43 to 84.87, but I think we're likely going to take that out. We'll have to see. And I'd said that the trade above bear with me just a moment. Okay. So in the RBOB, or unleaded gasoline, rolled through October also. We held exhaustion with the 279.75 low. We've rallied 47.83 cents so far. And then we held final exhaustion with the 279.75 low. We rallied 47.83. The break above 290.95 has brought in 36.63 cents of strength. The trade above 299.96. I said projects this upward 20.5 cents plus. We've seen 27.62 cents of that so far. And then on the 10th, we left a medium bullish reversal below. We've rallied 23.08 cents from the 304.50 open. The trade above 315.45. I said projects this upward 8 cents minimum, 40 cents plus maximum. We've attained 12.13 cents of that so far. So these all roll into the OC. I'll be updating them with the SEP until they come off the board. Then the trade above 288.02, the minus 3 per hour, put this above an equivalent formation in the OC to that of the SEP, and has brought in, sorry, I forgot to fill that in. 288.02, 299.67, 299.67. It's brought in 11.65 cents of strength. Decent failure back below this formation is going to warrant a decent pressure. That's going to come in at $290.97. Minus 0.5 of a tick per hour starting at 8 o'clock p.m. Eastern Standard Time Monday night. Okay, in the heating oil, we also rolled into the October. We held exhaustion with a 367.25 low and it bounced 78.68 cents. 0.64 cents, excuse me. The trade back above 376.59 has brought in 69.3 cents of strength. We left the minor medium bullish reversal below, and we rallied 39.28 cents from the 406.61 open. Trade above 407.64 has brought in 38.25 cents of the strength warned about. Trade above 416.04 has brought in 29.85 cents of the strength warned about, and then the trade above 427.51 now warrants a renewed strength. We've seen 18.38 cents of that. I warned the trade above 438.61 by any amount will suggest continued structural strength. We took that out today, and we've been seeing some of that strength since. These all roll into the OC and will be updated with the SEP until they expire. In the OC, the trade above 415.84 has brought in 16.63 cents of strength. If we fell back down through that, that'll warrant a decent pressure. That's going to come in at 415.15 as of 8 o'clock p.m. Eastern Standard Time. Also, I would warn here, decent trade above 431.42 plus 4 ticks per hour starting at 8 o'clock p.m. Monday night, we'll project this upward 65 cents minimum, $1 plus maximum off of a pretty well-formed formation. If we break above there decently and back down through it decently, look for decent pressure to come in, likely for days. A decent penetration is going to be 484 ticks up until the Tuesday open. In the Brent, I warned that if we held this general area of exhaustion, we'll start a new bull structure, which could be significant. We came shy of that with a 70.14 low and have rallied $31.86. A number of other bullish calls in here. The trade above 82.25 brought in $8.96 of strength. The trade above 84.96 has brought in $6.24 of strength. On the 10th, we left a minor / medium bullish reversible low. We rallied $6.08 from the 85.13 open. The trade above 88.27 projects this upward $3.15 minimum, $13.70 plus maximum. We're $2.94 into that so far. Bear with me a minute. 27. That's going to be shaved by 25 ticks, so that's going to be a 290 minimum. $13.45 plus maximum. So the 294 fits the minimum so far. That'll decrease by 20 ticks, 25 ticks per day. Decent failure. And then the trade above 89.05 also warrants a decent strength. We've attained $2.16. We fail back down through that line. That's going to come in at 89 even. Minus 1 tick per hour starting at 8 o'clock p.m. Eastern Standard Time. A maintained gap lower tomorrow also in the, bear with me just a minute, let me back up here a second. A maintained gap lower in the heat would leave a minor bearish reversal above. Sorry, okay, jumping back over to the gas oil. A maintained gap lower in the gas oil tomorrow will leave a minor bearish reversal above as well. Excuse me. Okay, and finally in the gas oil, the break above 896.59. I said projected this upward 19 minimum, 60 plus maximum. We've attained 398.91 there. A number of other bullish calls in here. More recently, we held exhaustion with a 1053.75 low and rallied 249.5. We left the minor medium bullish reversal below. We rallied 116.75 from the 1186.50 open. The break above 12.1650 brought in 86.75. The trade above 12.7560, I said now warrants a decent strength. But I would note we may be in the last stretch of the move up from 578 with possible exhaustion to contend with at 12.95 to 13.08, 13.61.25 and higher. So we settle right in the middle of this, but I think we're going to take it out because we just broke back above this line. I said since we took it out, the line mentioned above, it suggests we'll likely take out the lower exhaustion and probably head for the next. The cadence going into tomorrow is the heating oil is the strongest of the three, the RBOB in the middle, and the crude the weakest of the three relative to one another. The heat crack leaves a maintained gap lower tomorrow. That'll leave a minor bearish reversal above. Okay, thank you for watching, and the spreads will be coming out later tonight. Sorry about the lighting on this. It's pretty bright, so see you in the next podcast.